right, welcome back, everybody, to Real Talk Realty Podcast, where we put the real in real estate. You're here with your host, JD.
And Gabby.
And we have a special guest today, Darren.
Darren Ferlisi with Integrity Home Mortgage. Thanks for having me, guys.
Absolutely. Thanks for hopping on here with such short notice. Our counterpart, Louie, is now on vacation in Florida, so yes. We had to scramble to get a guest, and Darren was more than happy to jump on here. So we're super excited to have him and talk a little bit about some things on the lending side of the real estate transaction, and also, you know, what the market's doing, what to expect, and some different strategic approaches to making an offer on some properties with your clients. So first, why don't we just kind of jump into what we're seeing out there right now, Darren, with say the mortgage rates, what's going on, and you know, how are first-time home buyers faring out right now?
Absolutely. Yeah, that's a great question. There's a lot of options for first-time home buyers. There's some misconceptions out there that, you know, you need 20% down or something like that. I mean, that's a little more old school thinking. That was certainly the case back when, you know, my parents purchased a home, but times are very different, and there's a lot more programs and opportunities for first-time home buyers. So there's conventional type loans, 3.5% down for first-time buyers, as well as other programs like an FHA loan that allows 3.5%. You also have your 100% financing, so no money down programs like USDA, VA loans. And on top of all that, some areas have down payment assistance programs, which can vary from state to state, county to county, depending on, there's other layers involved too, which would be credit score, restrictive, income limits, depending on where the home is, things like that. But plenty of opportunities, and we see a lot of first-time home buyers getting some wins in this market.
That's awesome. Yeah, we were just talking about it in our meeting. One of the other kind of benefits to what's going on in the market right now is, you know, we're seeing buyers that are able to get some contingencies, you know, within their deal, whereas, you know, obviously two or so years ago, it was almost impossible to get, you know, a home sale contingency into your offer, you know, meaning by that, I mean, if you have a home to sell and you make an offer on a property, you know, it's contingent on the fact that you sell. That used to be really hard to get accepted in a competitive market, especially when you're going up against, you know, 6 or 7 other offers. You know, obviously the seller in that scenario is going to take the one that has the least hoops to jump through. But now, because homes are starting to sit a little bit longer, it's not much longer, but just a little bit longer, it gives us an opportunity to help these people that, you know, want to get home inspections, that don't feel comfortable waiving them in a multiple offer scenario. So that's been great. And that's one of the things that kind of leads me into the next topic, which was like, you know, everyone's talking about the interest rates. And Darren, you know as well as I do that what happens when the interest rates come down, right? Buyers enter the market, right? And the inventory doesn't change. It stays the same. So now you just have more people competing for the same house. Yep. It makes it almost impossible to get in there. So that's why, you know, when people say that the golden question, right? Every day we get it. Is it a good time to buy? Right. The answer is yes. Absolutely, it's a good time to buy, because if you buy now, all right, and the interest rates happen to come down, which right now there's a lot of things up in the air. We're not really expecting too much of a change in the immediate future. That might be something a little bit longer down the road. But when that opportunity comes up, you do have the ability to refinance, bring that payment down, and you got the house that you wanted without having to compete and pay over for the actual price of the home. Right. So that's the big thing here.
That's a great point, JD. So everything you're saying is 100% true in what we see. When the rates do come down, more buyers enter the market, whether it's because their ability to afford more or just from not wanting to be involved in a higher rate environment. So when the rates do come down, typically we not only see more people enter the market, but home prices tend to increase at that time as well, because you have more people competing for the same home. And then all those contingencies and things like that you've mentioned, all those start to go away. So there's less opportunities for first-time buyers to be competitive and pay over and above asking price, waive appraisal, have a home inspection, and all that sort of thing.
Yeah, because I'm sure, Darren, you do remember when it was a little insane that you probably had some buyers that were a little nervous because they were having to waive their appraisal just to compete, you know. And what happens, guys, for those of you that don't know, if you go to purchase a home, right, it's going to be subject to an appraisal most of the time, right? And the bank's going to come through. They're going to make sure that what you're paying for the house is worth it. Now, in the event that there's 10 other people competing for the same property, what some buyers were doing in that market were waiving their appraisal. And what they're saying is up front, hey, I don't care what it appraises at. I'm willing to pay whatever the gap is between contract price and appraised value. And so when that was happening, it was a dangerous gamble some of the time. Yeah. So, I'm sure that's it's a lot nicer now to not have to worry about some of that added stress that some of those buyers were feeling.
Absolutely. So there's not as much competition now, which, to your point, makes it a great time to buy.
So you came over last week. You came to the team meeting, and we got a chance to meet and discuss with you, some of your programs and what you're seeing out there. And I know one of the hot topics that we talked about was the 2-to-1 buy down. So why don't you explain a little bit about what that means for potential buyers and the ability that they might be able to find a little bit better interest rate than what's kind of being marketed out there?
Absolutely. It's a great program, something that, again, I don't think we'll see be advantageous in a competitive market, because the 2-1 buy down scenario is something that the seller can contribute toward the buyer's closing costs. So it's something paid by the seller. And what it allows for is the interest rate on the loan to be a full 2% lower the first year, the first 12 months. Second year, it would be a full 1% lower. And then years 3 through 30, it would be the remaining terms, or whatever the loan was originated for with the market rate at the time. So for example, if the going rate was 7% and the buyer was able to work this program in, the first year their payments would be based on 5%. Second year, 6%, and then years 3 through 30, assuming a 30-year loan, it would go back to 7%. A lot of the thought process there is that hopefully we'll see better interest rates in the next couple of years, so where someone can refinance before then. But again, no crystal ball here. We don't know exactly what's going to happen, but that's been a win for some buyers, which helps ease them into the payment at this time.
And I would say, Darren, that is a great opportunity for those homes that you find that have maybe been sitting on the market for a little longer. Say something that's been sitting 2 to 3 weeks, maybe doesn't have the necessary attention, and your buyer can maybe come in and negotiate that in there. As you said, it's probably not going to be your favorite thing to try in a competitive market, because no seller is going to be interested in doing that if there's going to be 5 other offers on the table. But if you can have a buyer who finds that kind of hidden gem out there, that'd be a good opportunity for them.
Absolutely. And, you get your expert real estate agents like JD and Gabby that know how to negotiate that. That's something that they can work into the deal. And sometimes we see cases where if it is going to cost the seller, let's say $6,000, they might increase the purchase price by that $6,000 and then ask for that credit back. And it's something of a win-win for both.
Oh, yeah, because the difference in the 2% is going to be way bigger than what a $6,000 added on to the contract price would work out to be. So,
and that's another thing, too. So jumping gears just a little bit, I've always, for me, I know the answer, but from a lender view, I want to see what your opinion is when a buyer's like, oh, does it make more sense to ask for $10,000 in seller credit or $10,000 off of the sales price?
Absolutely. And that's a great question. It's not an exact science, but the rough math works out to be about $7 a month in payment for every $1,000 in loan. So in a $10,000 scenario like that, it would be about a $70 difference per month, and that would save the buyer about $10,000 out of pocket.
But if they get the $10,000 in seller credit, they could use that to buy down the rate and maybe make it work a little better, right?
Absolutely. It can be used toward closing costs or that 2-1 buy down scenario.
I just showed a house yesterday, and it was a property that had been flipped, and it was a decent flip job. Sometimes you're out there looking at some flips and you walk in and you're like, oh my gosh, this thing is terrible. You could tell when they rushed it. This one wasn't that bad. Just some odds and ends. I could tell that not necessarily that they were cutting corners, but they just kind of left some things, little, I would say like the drainage spouts on the outside were just kind of right next to the foundation. Some simple things. But anyway, one of the things I always talk to my buyers about, especially if that property doesn't have a lot of attention, is, hey, why don't you just ask for some seller contribution, right? And then use that money that you're saving at the closing table to maybe make some of the upgrades that you want to do.
Let's jump a little bit. I know one of the questions that I get asked a lot from buyers who are looking to get pre-approved is, I don't want to get pre-approved because it's going to affect my credit. So does getting pre-approved with a lender actually affect your credit?
Yeah, that's a great question, Gabby. So what we can do is a soft credit pull, and that will import the debts and liabilities that the creditors are showing without the hard inquiry on someone's credit. So it will not affect their credit scores.
That's awesome, because that is a huge question. A lot of people have, like, especially if somebody is in like credit repair, they've been working to increase their credit and they want to see kind of where they sit. That's a nice option to have, just doing the soft pull. Obviously, if you get under contract, you're going to have to do a hard pull as we get through underwriting and all of that.
Typically what I'll do is, once we do the soft pull, I will instruct them, or sometimes on their behalf with their permission, I can opt them out for them. And it usually takes about 5 to 7 days. And the reason for that is when the hard pull is done, which will be needed at some point when the contract comes in, they don't get blown up and spammed with all these phone calls, these annoying calls that we all get.
So if you are trying to pre-approve a buyer and they're just not quite where they need to be, talk a little bit about the credit repair and what you guys are able to help them with.
Sure. We have tools and systems that we can run the credit scenario through this tool that we have that will help and give advice as far as what can be done. Sometimes there's quick fixes. A lot of times just paying down some credit cards can have a huge impact. The credit utilization, so that balance to limit ratio between what is owed on a credit card versus the limit, that can be really impactful. Other times there's things on there that could be, if a late payment was 11 months old, but we know that the 12-month will see a significant increase, then we'll just revisit it in a month. Other times we'll find that there's just bad information on the credit report. I'm working with a client right now that had an account closed in 2021, but yet September, October, November of 2023, they reported him late.
Huh.
So as you can imagine, not only is that
heck?
killing his credit score, but it's also affecting his ability to get an approval. So helping him get a letter from that creditor so that we can get that removed.
That's awesome. Yeah, so it sounds like you don't just, if somebody tries to get pre-approved with you and let's say that, they need some work or they have some things to take care of, it sounds like maybe you guys give them a little bit of a roadmap to success. It's like, hey, here, you're not, capable of buying just yet, but if you take care of this, this, and this, we can get you there.
Absolutely. I always say time heals all wounds when it comes to credit. So even if they're not in a position to buy right now, sometimes it might take 6 months or 12, but either way, we have a plan that we can put them in place.
For those people out there who want to buy a house but think you need lots and lots of money to buy a house, tell us a little bit about programs and things that can help those buyers.
Yeah, great question. That's definitely a misconception that I still hear, even though it's been this way for quite some time now. But you can get into properties with no money down, depending on the program. And, qualifying is always a case-by-case basis. It's going to depend on your credit score and where you're looking, and there's program limitations sometimes for income and that sort of thing. But generally speaking, 3 to 3.5% is usually enough to be able to qualify with the minimum amount down.
And also with a lot of those programs, you're able to stack them, right? Let's say that there's a local program that's specific to, say, I don't know, just say Hagerstown, Maryland. Like I say that because I know, for example, they have the Hagerstown Home Store program there. And then you're able to actually stack that with a more statewide program, the Maryland Mortgage Program. And that's kind of two things put on top of each other. So could you explain how that works, how that grant money becomes available, and then also what happens when they go to sell? Do they pay that back, or how does that work?
Yeah, great question, JD. So there are programs out there that do allow for either down payment assistance or closing cost assistance, or to your point, they can be stacked. Each program is different. Some are forgiven right away. Others do have a repayment plan, repayment recapture. Once you do sell the home, refinance the home, change the occupancy from primary residence to investment property. So each program has its own nuances to it, but there are definitely some great opportunities for people to stack these programs, can get in with no money down and get their closing costs paid for.
Wow. That's awesome, because I remember that's something more like when I first got into real estate 5 or 6 years ago. One of the first couples that I ever helped was a young couple trying to buy a townhome here in Frederick, and they were not rock star buyers as far as they didn't have a ton of money. They had pretty good credit scores. They were able to qualify, but we were able to get, ask for some closing assistance, get them some grants, and they ended up bringing like $2,500 to the closing table and actually purchasing that home. They've been there for 5 years now and have gained. I actually just talked to them recently, and they gained over $100,000 in equity.
Wow.
So in just that amount of time, with only bringing $2,500 to the table, which leads me to the kind of of misconception that Darren, is speaking about. People assume you just need a ton of money to bring it to, in order to purchase a home. And that's just not the case. And if you're out there renting and your goal eventually is to buy at some point in time, the first thing I would encourage you to do is to check with a lender and check with Darren, and see what you can do. Because like he said, if you're not capable of buying just yet, you'll at least have some insight on what things you need to take care of in order to get yourself into a position to make a play or make a purchase. And I just think knowledge is power, and you can't really make any valuable decisions until you have the necessary information. Another thing is, whenever somebody's getting pre-approved, all the money that is being brought to the table needs to be accounted for. But we've had scenarios before where, let's say, a grandparent or a father or mother wants to gift their child or somebody in their family some funds in order to help close the deal. How does that work? Because I know that it's got to be reported. Everything needs to be accounted for. How do you account for that?
Absolutely. That's a great question. So there are options for the gift funds to be allowed in all types of loan programs. And usually I like to advise the clients ahead of time. So if I know that a gift is coming, I will advise the buyers the best way to handle that gift. That way we can make it as easy as possible with the least amount of documentation for everybody. Yep. So if mom or dad were to deposit $10,000 in your account today, we would have to then ask mom or dad to provide a copy of their bank statement showing where the funds came from. They want to make sure, or we as a lender want to make sure that there are no other loans taken out, meaning that $10,000 doesn't result in another payment or something like that.
Right.
And of course, there's anti-money laundering involved as well that we have to just make sure where it came from. But to alleviate all that, we can have the parents gift the funds directly to the title company. At that point, all we need is a signed gift letter, and then there's no further documentation needed.
Okay. That sounds pretty good.
Yeah.
One of the other questions I was going to ask you, just to kind of bounce back to what we were talking about with some of those programs. Now, to access some of that money, let me ask you, so what do you, I know there's like certain requirements, right? There's income limits, right? Like you can't make over a certain amount of money and qualify. What are some other things that they should maybe consider? I mean, I know they have to check with you ultimately, but like what are some things to keep in mind when you're trying to access some of that grant money?
So a lot of times those programs are limited to income, like you said, debt to income ratio, and their credit scores. So if they're utilizing these programs, they have additional guidelines on top of the normal guidelines that we'll see that might be a little more flexible. So these programs have their own limitations as well.
Gotcha. And they're very specific,
Right.
to each one.
They
right?
vary by state, they vary by county. There's different options.
Okay, awesome. And to move into a little bit of more about what's currently going on in the market, what are you seeing as far as appraisals? I know for a while there we were seeing, properties underappraising during that COVID time where everything was just going rocket sky high and the appraisals were coming in low, and then sellers and buyers were clashing, just before settlement on how we're going to get to this price that everybody agrees on. What are you kind of seeing out there? Again, I know it's specific to each each transaction, but overall, what are you seeing out there?
Knock on wood, I've seen appraisals match sales price here recently. We've not had any issues. I mean, onesies, twosies, maybe here and there.
Yeah.
But on the whole, by and large, I've not seen the appraisals not keeping up and supporting the sales price.
That's really good. That is great to hear,
That
because
is
for a
good.
while there, it was like super stressful. Like your buyer would come in, you would make a strong offer, get them under contract, and everything would be great. And you get past your inspection, you'd be flowing along, you'd be going shopping, ready for the
Yep.
deal to close. And then all of a sudden they're like, it came in 15 under contract price. And the lender's like, oh, well, let me know how it works. And then you go to the seller and you're like, hey, can you bring it down? And sometimes they're like, we'll meet you in the middle. And if you have a buyer that's already tight with their funds, sometimes it's hard to split a $15,000 difference, especially when you're not expecting it. So credit scores, right? That is such a big thing. Everybody's like, I know you love this one, Darren. I checked my Credit Karma and I've got a 790. And then all of a sudden you check their credit and it's not a 790, and maybe even a 690. That I kind of always equate this to like back when I was in the car business, which was like everybody would check Kelley Blue Book for the value of their car, and they'd come in and they say, my truck is worth $10,000. KBB said it. And I would be like, well, good thing KBB's not buying your car, but we are. So where do you see it as far as like proximity? You know, what's your opinion on the Credit Karma and everybody kind of putting so much weight on that?
That's a good analogy too, as far as Kelly's Blue Book. And a lot of people can relate to that. So with the credit scores, there's different algorithms that are used in each industry. Credit Karma, I think, is a great tool for monitoring your credit. You can see when someone has a credit inquiry. You can see if any of these creditors are marking you late, that sort of thing. However, not super accurate when it comes to the actual credit score. So that mortgage lenders see, at least.
Right.
You can get your credit score from Credit Karma in the morning, maybe your credit card company in the afternoon, go to an auto dealership, and then a mortgage in the evening, and you're going to see 4 different scores. Typically, the mortgage lenders see scores that are lowest of all of them, unfortunately. Hate to be the bearer of bad news, don't blame it on me. And I think it's just because of the algorithm, again, in place on the mortgage side is a little more stringent. I think they go back farther in time with the history, and also some derogatory items would affect the score more negatively than they would on other accounts.
So a follow-up question for that, what score would someone need to be able to qualify for like a home?
Good question. 620 is typically the minimum across the board. USDA, conventional loans, VA can sometimes go a little lower. We can go down to 600, and FHA 580.
We just wanted to thank Darren for coming along today on short notice. And as you could tell, he has a lot of insight on the mortgage side of what we do on a day-to-day basis. And if you would like to contact him and start your pre-approval process, you can reach out to Gabby or I, and we'll actually put in the caption his contact information so that you can go ahead and reach out to him. Again, there is no problem with gathering the knowledge up front. It's going to allow you to make better decisions and empower yourself to place yourself in a position to be able to purchase and make your dreams come true. So thanks again, Darren, for coming, and Gabby. And you all have a great rest of your week, and we'll catch you next week.
Bye, guys.
Bye. Thanks for having me.